Tonight topics will be DSG and sustainability reporting regulatory landscape, Southeast Asia. Excuse me. Now we already saw about the video of eco-sustainability. Eco-sustainability is a consultancy firm headquartered in Singapore with presence in Cambodia, Indonesia, Malaysia, Thailand, and the Philippines. Our core service includes sustainability reporting, consulting, carbon credit, training, and policy. We are also standard contributors to the ISSB, FERA, SASB, Singapore's voluntary market, SBTI, GHG, and GHG protocols. We are in the 6 countries with more than 100 projects. We have 21 consultants, and we are also standard contributors for a lot of standards, and we also follows a lot of standard in the world. This is our presence. This is our headquarters. What we do, this is what we do. We have green consulting, sustainability reporting, education, think tank, and carbon credit project. This is a standards and the frameworks as well. We also the standard contributors for these standards. And during the talk series, the session will be recorded. Please keep your microphone on mute during the presentation. Post your questions in the chat box. My team will respond or address them during the Q&A. And remember, there is no such thing as a silly questions. Now, we are talk about the ESG and sustainability reporting regulatory landscape in Southeast Asia. The objectives. By the end of this season, participants will be able to understand the current level of ISSB adoption across Southeast Asian jurisdiction using the IFRS jurisdiction adoption framework, and then compare sustainability reporting requirement timeless and regulatory approach across key Southeast Asia countries. Recognize how global regulations such as EU CBAM, EU Deforestation Regulation, CSRD affects Southeast Asian companies and supply chains. And the last one is identify practical implication for business operating in or exporting from Southeast Asia, including data governance and assurance readiness. Those are the objectives of tonight's talk series. Now we move on. Sustainability reporting remains limited in practice. Company publishing sustainability reports in Asia What the data shows is 69 up to 100% across Asian markets. Scope 1 and Scope 2 emission about 18 to 19%. Disclosure often partial. Scope 3 emissions by source 13%, largely missing. Transition relief common. Long-term climate risk strategy that 25% describe long-term climate risk strategy. It means, and then one things that very important is only 2 up to 3% of companies reported on all 11 TCFD recommendations, providing information about the company's governance, strategy, risk management, and metrics and targets. This needs to be boosted by making sustainability reporting mandatory. States of sustainability assurance globally, we can see from this data that maturity score by the headquarters regions, we see that in the North America about 49.01%, Europe about 48.87, Asia Pacific 46.7, and the last one is the Latin America about 39.98. Sorry, there is some connections error in my side. We shall continue. This ESG assurance maturity scores is measure how ready an organization's ESG reporting is for independent assurance based on governance, skills, data management, and digital systems, and value chain control. A higher score indicates ESG information that is reliable, control, and closer to financial grade, while a lower score signals fragmented data, weaker control, and higher assurance risk. It means that for the Asia, right now for the Asia Pacific, the score is about 46.7. It's not great, I think. Now, the benefit of the assurance that the ESG assurance enhance the credibility, reliability, and decision usefulness of the sustainability disclosures, reducing risk and strengthening investor and regulator confidence. The higher the scores, it means that it's higher credibility, higher reliability, and investor confidence is very high. Besides that, the lower the investor confidence very low. And also, it's about the reputations. The higher the score, the reputation is very higher. Now, we can see that ESG assurance is no longer just a regulatory response. It is now driven by capital markets, governance expectation, and reputational risk. You can see that's the stakeholder pressure by years. We can see that the regulators from time to times there is some high and low, but not significant. About 69 in 2025, in 2024 about 70%, and 2023 is very low, about 64%. The challenge in preparing for sustainability reporting assurance is the most important thing, one, complexity of reporting requirements. unclear evolving regulations, inadequate supplier ESG performance, inadequate access to data, insufficient IT and digital solutions, cost of compliance and available funding. The highest is the complexity of reporting requirements. The number is getting higher from the 2024 from 41% up to now is 2025 is about 51%. This is a very complex things. It's very challenging about the complexity of the reporting. Fragmentation across framework is a core problems. Multiple frameworks create inconsistent, costly, and non-comparable disclosures, making it harder for companies, investors, and regulators to link climate risk to financial decisions. Now, we now talk about the ISSB. Why these standards, most of the Southeast Asia use the standard to for the making the report of the sustainability reporting in also Southeast Asia. The International Sustainability Standard Board was created under the IFRS foundations at COP26 to bring the same discipline to sustainability reporting that IFRS brings to financial reporting. IFRS for the sustainability reportings, there are two. One is the IFRS S1 is for the general sustainability disclosures, and then there is another one is the IFRS S2. The IFRS S1 set the overall framework for sustainability related financial disclosures based on the task force on climate related financial disclosure or TCFD architecture of disclosing sustainability information. Focus on the needs of investors and financial markets. For the IFRS S2 is the climate related disclosures. For the S2 is a climate specific standard that goes deeper into climate risk and opportunities, including your physical and transition risk. Different from the GRI, for the IFRS, how the climate change, how the outside can this for the IFRS is different from the GRI. GRI is inside out. What the company do for the environment, and for the IFRS actually outside in, how the climate change affect the companies itself. That's the core difference between the GRI and the IFRS. So let me rephrase it again. For the GRI standard is the inside out. It means that what the company can do for the environment. But for the IFRS is the outside in, how the climate change can affect the company, how the company can handle the climate change, how the company can handle the climate change, not to make the company to be let's say go down, but how to overcome the situations. How is ISSB changing the regulatory landscape? There are four things. One is the established global baseline for climate and sustainability disclosure. Two, brings climate reporting into the same rigor as financial reporting. Three, requires disclosure of GHG emission, climate risk, governance, and financial impacts. And the last one is enables comparability across markets, including Southeast Asia. The level of the adoption for the ISSB, this country already adopted for the ISSB. There is also partial adoptions, limited transitions, committed to adoptions, full adoptions. We can see from this country, India, China, South Korea. We can say that fully adoptions of the ISSB. Now, how about the Asian? Before we discuss, we study about the regulatory framework update from the Asian actually already have some Asian Common Carbon Framework, or we can say the ACCF. The framework is driven by the coalitions of major national carbon markets associations and regional bodies acting as the entry points to connect regional policies with domestic realities. And the 5 founding signatures are Malaysian Carbon Market Association, Asian Alliance on Carbon Markets, Indonesia Carbon Trade Association, Singapore Sustainable Finance Association, and the last one is the Thailand Carbon Markets Club. The Asian Common Carbon Framework is established in 2025, actually. And the core philosophy of the ACCF, Asian member states have vastly different economic profiles, institutional capacities, and policy priorities. The ACCF does not seek to enforce a one-size-fits-all rule book. Instead, it serves as a platform to allow diverse national registries and systems to connect credibility and efficiently. This is the core philosophy, because in many Asian countries, yes, we have a different economic profiles between Indonesia and Singapore and Malaysia and Thailand, and we have a different institutional capacities and policies priorities. So based on this philosophy, it's a platform actually to allow diverse national registry and system to connect credibility and efficiently. The regional markets developments in Asian actually for the ACCF is in the future there will be a market integrations in Asian. The Carbon Market Associations from multiple Asian countries signed a historic collaboration agreement to link system, improve liquidity, and create a shared database. And Asian, there are a lot of blue carbons in many Asian countries. So in the future, the ACCF is focused on the blue carbons. Asian actually launched a joint project with the Japan and the UNDP to map and value carbon stored in marine ecosystems like mangroves and seagrasses to unlock new climate financing. For the blue carbon itself, the biggest is in Asian. The challenges and the next step for the ACCF is the low local demand. While Asia is rich in carbon supply, local demand for buying these credits remains thin. Only tiny fractions of total credit issue are retired by entities inside Southeast Asia. Strict standards, the project must now meet high international benchmark to ensure the credits are legitimate and trusted globally. So this is the two challenges in Asian countries actually for the carbon project. Now, we continue to the Southeast Asian jurisdiction by jurisdiction landscape. For the Singapore, who is covered? For the Singapore, all listed companies and large non-listed company. Large non-listed companies, the revenue is about more than 1 billion Singapore dollar. Or we can say that and 1 billion in 1 billion, more than 1 billion Singapore dollar in revenue and more than 500 million assets. The listed companies, when it starts, the climate disclosures align with the IFRS S2 from 2025, Scope 1 and Scope 2, GHG required, Scope 3 expected from 2026. For the large non-listed company, mandatory climate reporting in 2027. Scope 3 deferred until at least 2025. What is required? Disclosure of material climate-related risks and opportunities, investor focus, decision useful information, and other sustainability topics remain voluntary. Assurance, limited assurance on Scope 1 and Scope 2 expected. Listed company from the 2027, large non-listed company from financial financial year 2029. The key takeaways for the Singapore is one of the regional leaders in operationalizing ISSB, starting with the climate and scaling toward full alignment. How about the Malaysia? Who is covered? Listed company, main market and ACE market, large non-listed companies, annual revenue more than 2 million Singapore ringgit. When it starts, climate first reporting from 2025, full IFRS S1 and S2 from 2027 for the group 1. For the group 2, climate first from 2026, full IFRS S1 and S2 in 2028. For group 3, ACE market and large non-listed, it will be 2027, full IFRS S1 and S2 from 2030. What is required? Disclosure of material sustainability related risks and opportunities, starting with climate. Reporting aligned with the IFRS S1 and S2. Investor focus. Decision useful information linked to cash flows, access to finance, and cost of capital. Assurance. Reasonable assurance on Scope 1 and Scope 2 GHG emission plan. Expected to begin for Group 1 issuers from 2027. And the key takeaways for the Malaysia is among the regional leaders in ISSB adoptions with the clear, mandatory, and phased pathways from climate first reporting to full ISSB alignment. The Philippines, who is covered all publicly listed companies thereby the market capitalizations, large non-listed companies that has annual revenue more than 15 billion Philippine peso, government corporation classified as commercial public sector entities. When it start, Tier 1 in 2027, 2026, Tier 2 for the middle cap, Philippines, the revenue about 3 billion up to 50 billion Philippine peso start in 2027. Tier 3, small caps and large non-listed will be 2028. Early adoption is permitted and encouraged. What is required? This is what is required for the Philippines. Disclosure aligned with PFRS S1 and PFRS S2. The second is the reporting of material climate and sustainability related risks and opportunities. Investor focus, decision useful disclosures. Additional stakeholders focused disclosure are permitted but optional. Assurance, limited assurance proposed for all listed and large non-listed entities to apply 2 years after mandatory adoptions. For the takeaways for the Philippines has clearly committed to ISSB adoptions and set a phase tier roadmap positioning the market to move from narrative sustainability reporting toward financially materials, investor-grade climate disclosures. Indonesia, who is covered publicly accountable entities including listed companies, financial service institutions, financial scope to be confirmed by the Financial Service Authority, or we can say in Indonesia is OJK, Otoritas Jasa Keuangan. When it start, effective date targeted January 1st, 2027. Because right now Indonesia for the reporting adopted from the GRI standard, but in 2027, especially from the January 1st, 2027, is a mandatory to adopt the IFRS standards. Expected the first report will be in 2028. Early adoption is permitted in Indonesia. Yes, during these days, from 2027, 26 up to the end of this year, any companies in Indonesia that willing to adopt the IFRS standard is permitted. What is required? Mandatory climate-related disclosure are aligned with the IFRS S2 during initial years. Disclosure of material climate-related risks and opportunities. Broader sustainability disclosures beyond climate are voluntary initially with the post-implementation review plan in 2027 and 2029. Assurance under consideration, no final insurance requirement announced yet. Yes, no final assurance. The key takeaways, Indonesia is pursuing a climate-first, ISSB-aligned approach using local standards to deliver functionally equivalent outcomes while giving the market time to build readiness. Right now, in Indonesia itself, most of the companies have some confusions because there is a gap between from the adoption from the GRI to the IFRS. most of the companies that I already discussed that they having some confusions. How can they implement? How can they adapt the IFRS standards? So there is a gap between the GRI and the IFRS. For the Thailand itself, who is covered? Listed companies on Stock Exchange of Thailand, including IPOs, and then listed funds and trusts, including RAITs, infrastructure funds or trusts, and property funds. Reporting to apply at the consolidated entity level. When it starts, set 50 companies reporting start in 2027. SAT 100 companies reporting start in 2028. Another SAT listed companies reporting start in 2030. MAI listed companies and listed funds reporting starts in 2031. What is required? Climate first reporting aligned with the IFRS S2 and climate relevant parts of IFRS S1 for the first 5 years. Another is the after trend all material sustainability related risks and opportunities and investor focus, decision usefulness, useful disclosure subject to materiality. Assurance, limited assurance on GHG emissions proposed, final assurance framework to be confirmed. The key takeaways for the Thailand is taking a gradual climate first approach to ISSB adoptions, allowing extended transitions, reliefs to match market readiness while committing to full alignment over time. For the Cambodia, for the regulatory status, sustainability reporting largely voluntary for financial institutions and selected listed or quasi-public entities. ISSB used as a reference frameworks, not yet formally adopted, focus on awareness, pilots, and capacity building. Climate disclosure, no mandatory IFRS S1 or S2 requirement today. Climate and ESG reporting encouraged on the best effort basis. Assurance, no defined assurance requirement at this stage. Outlook, gradual progressions toward alignment. Emphasizes on proportionality and market readiness. For the Cambodia is laying on groundwork for future ISSB alignment, prioritizing readiness and institutional capacity over immediate mandatory compliance. For the Vietnam, regulatory status, early to transitional phase of ISSB alignment. Sustainability reporting partially mandatory, climate focus for listed companies, financial institutions, particularly banks and large stage link enterprises. ISSB used as a key reference framework. Climate first focus, drawing on IFRS S2 principles. For the climate disclosure, it emphasizes on physical and transitions climate risk. Another is the strong relevance for export-oriented and supply chain exposed sectors. Assurance, no comprehensive ISSB aligned assurance requirement yet. Outlook, gradual convergence toward ISSB and focus on capacity building, data readiness, and regulatory coordinations. Vietnam is strategically aligning with ISSB rather than formally adopting for using climate disclosure as the entry point while preparing the market for the future convergence. For the carbon tax, this is the type and status and the latest price in Southeast Asia. Southeast Asia, for the carbon tax, we can see that uh, for Singapore itself, the status is active since 2019. This is the price. This is the price of the carbon, the latest price. For the Indonesia itself, the law is passed, implementation is delayed, yes, but we have the regulations, official regulation from the government. The latest price will be, the plan will be around, right now with the dollar for Indonesia is 18,000 rupiah, is about 1.5 US dollar. 1.5 US dollar. This is a US dollar, 2 US dollar when the US dollar Indonesia for 15,000. But right now the US dollar now increasing up to 18,000. For the Thailand itself, for the status for the carbon tax is planned, but it's approved in principle. The latest price we not announced yet officially, but it's around 200 baht. 200 baht. For the Malaysia, the status is planned target 2026. Not yet announced for the latest price. Vietnam status in pilot phase. There is not yet price. Philippines, Cambodia, Laos, exploratory. There is not yet. There is no price for the carbons. Myanmar and Brunei, no formal framework for both countries, for Myanmar and Brunei. Now we talk about the global regulation affecting Southeast Asia. We have a three: CBAM, EUDR, and CSRD. For the CBAM is actually EU carbon border adjustment mechanism. What is this? This is a EU policy that prices carbon embedded in imports to prevent carbon leakage. Reporting now, carbon payment starts in 2026. The targets carbon-intensive sectors, Asian impacts, uneven exposure, Malaysia, Indonesia, EU bond export potentially affected, omnibus update, 90% of importers exempts, but 99% of emission from covered sector still regulated. CBAM makes credible emissions data a trade requirement, not just a reporting exercise. Why it's a impact mostly in Asia, in Malaysia and Indonesia? For Indonesia itself, I can say a lot of export to Europe, to EU, European Unions. The first thing, the biggest one is the palm oil, and then the biggest one is the steel. That's the two main sectors that we Indonesia mostly export to European Union. Because of this, CBAMs, it very affects Indonesia because the palm oil is the biggest export sector in Indonesia. That's why this CBAM actually effect for Indonesia and also Malaysia, because Malaysia also has a lot of export palm oil to European Union. The relaxation to CBAM suspension clause likely commissions. The Commission has proposed an Article 27A suspensions clause, which could allow temporary suspension of CBAMs for certain goods in series and unforeseen circumstances, extreme price shocks, or market disruptions. This has not yet been formally adopted, but it signals willingness to provide flexibility in extraordinary case. EU Deforestation Regulations, EUDR. This is the EU regulation banning deforestation-linked products from EU market. In force since 2023, compliance from 2024, large firm and for small medium enterprises in June 2025. EU importers and non-EU exporters placing goods on the EU market who this is the targeted is the EU importers and non-EU exporters placing goods on the EU market. What products? Palm oil, cocoa, coffee, rubber, soy, cattle, woods, and derivative. The key requirement due diligence, geolocations, data proving deforestation, tree, and legal productions. Asian impacts, high exposure for Indonesia, Malaysia. Yes, because we have not only the CBAMs, but we also have to dealing with this EU deforestation regulations because Indonesia and Malaysia export a lot of palm oil to European Union, not only the palm oil, but also rubber. Also, this affects not only for the rubbers, not only affects Indonesia and Malaysia, but also Thailand. Thailand is one of the biggest rubber producers in Southeast Asia. For the Vietnam itself, for Vietnam and Thailand, Vietnam and Thailand is producer of the coffee and wood. Philippines, rubber, wood, coconut, and derivatives. Why it matters? UDR turns traceability and land use data into a market access requirement, not voluntary sustainability claim. This is a very important big now. That's this EU deforestation regulations has a very high impacts for the especially for the Indonesian. I'm talking for Indonesia because yeah, it's very effect for Indonesian actually. EU deforestation regulation seen as opportunity for Cambodia's exporters actually. Now emerging EU due diligence regulations are being framed not as a simple compliance obligations, but as a strategic opportunity for Cambodian exporters to strengthen their global competitiveness, official and industry representatives explained during the February 17 workshop in Phnom Penh. But for the Cambodia, for the EUDR, for the Cambodia itself is a big opportunity for themselves to set a global competitiveness for their country. Actually, for this country is a very quite big opportunity for the Cambodia. And then EU Corporate Sustainability Reporting Directive, CSRD. What is it? This is the EU flagship sustainability reporting regulations requires companies to disclose standardized decision usefulness ESG information aligned with financial reporting. Who is covered? EU large companies and listed small medium enterprise, not non-EU companies with significant EU activity, Yeah, you can say that 150 million euro EU turnover or EU presence. What is required? Reporting under European Sustainability Reporting Standard ESRS includes climate transition plans, scope 1 to 3 GHG emissions, double materiality, impact and financial risk, governance, strategy, targets, and metrics. What is matters? CSRD is not just about reporting. It reshapes data expectation across global value chain. ECB, this is from the news. So we can say that ECB wants simplify EU sustainability reporting standard, significantly reduce transparency for investors. The European Central Bank published its staff opinion on the revised European sustainability reporting standards, warning that several of the measures put in place to ease sustainability reporting requirement for companies under the EU's omnibus process will significantly reduce transparency for investor and other market participants. Implications, outlook, and readiness. Implications, sustainability reporting in Asia is no longer just compliance. ISSB, carbon pricing, and EU regulation are raising the bar. As you can see that now most of the standard EU regulations, they want to prevent actually their own market. So it means that they protect their own company in EU companies. So that's why they announce the regulations. The climate data is now financially material. It's very true. Emission and climate risk affect capital, cost, and market access. It's very true. So, and supply chains transparency is becoming a competitive requirement. Yes, it's very true. The outlook is the directions is clear, even if timeless differ across countries. It means that every Asian countries, the direction is to have a full implementations or adoptions of the IFRS S1 and S2. Even right now in many countries in Asia has a different timeline to fully adopted. For Indonesia, fully adopted in 2027. All companies for Indonesia. So we have a different timeline full adoption in Thailand, in Philippines, Vietnam, and other countries in Southeast Asia. Assurance expectation will increase over times. The climate and financial reporting will become more closely integrated. Yes, as we can see from the previous slide that the ACCF already have some statement that want to integrate the market in Asia. What is optional today, especially scope 3, transition plans and value chain data, is likely to become mandatory in the next few years. Yes, what is now the voluntary will be what is now voluntary will be mandatory in the next few years. The readiness, the priorities is there are four priorities. One is the governance, clear ownership and board oversights. The data, reliable ESG and emissions data system, regulations, awareness of global and local timelines, assurance, internal controls to support future verification. How much are company investing in capacity building? Frequency of sustainability training at companies based on revenue size. Ad hoc for the company with revenue more than 25 billion US dollar is 1%. For the less than 25 billion US dollar is 3%. Annually, update and refresher is higher, 30% and 37%. Optional ESG training regulatory 3 years. You can see this. The numbers 22 and 30%. Optional mandatory ESG training regulatory 3 years. Mandatory ESG training with knowledge checks regulatory 3 years. So this is the last slides for now. Do you have any questions? Please. So before you ask the questions, I would like to give some information to all of you. We are already now for the top series this June, sustainability regulatory landscape in Southeast Asia. Right now, we have another top series will be in June 15. Will be the speaker will be Miss Teng Lo, and in June 22nd we have Miss Ho Heng Heng for the Malaysia's National Sustainability Reporting Framework. For the Miss Teng Lo will be sustainability as a driver of business advantage. And this is our team. So if you have any queries or contact, you have some information your company needs to do the gap analysis and training and something like that, you can have these contacts, Miss Ho Heng Heng, Teng Lo, myself, Henry Rantau. We have Mr. Ariel Amadeo, and also Miss Chide Despri. And also join our community in LinkedIn and WhatsApp. Now, back to the questions. Do you have any questions? I hope you have questions because yes, thank you so much. You're welcome, Mr. Khalid Hassan and Miss Rash Sobel. Yeah, it is great for you to join again our top series. Mir Rash Sobel. Apologize if I pronounce incorrect. So, don't forget to join our community here for the LinkedIn and the WhatsApp. So we can talk more discuss in LinkedIn and WhatsApp. And you can also find out my LinkedIn just looking for my name, Henry Rantau. You can see the LinkedIn, myself, Henry Rantau, or you can send email to us if you like to. If you like to send email to Miss Ho Heng Heng or Teng Lo or me myself or Mr. Ariel or Miss CD, you can send an email to us, and also we have also give our number. This is my private number actually. You can send a message to WhatsApp to me, or you can say send WhatsApp to Miss Tenglo or another Heng Heng, Miss Heng Heng, or Ariel or CD. So. And also you can watch again our talk series in our YouTube channel. So you can watch all the talk series from the beginning of in our YouTube channel. You can search the Eco Sustainability YouTube channel. So you can see in the YouTube channel, you can see all the talk series already uploaded. The previous one that already uploaded. If you miss some of the talk series, you can see in the YouTube channel. Thank you for Mr. Muhammad Akhtar Ruzaman. Okay, we have 2 more minutes. Okay, is it is a privilege for me to do the presentation to all of you. Hopefully that you can have some insight about the carbon project, and not only in Southeast Asia but also for your own country, how the development carbon project in your country. And do not hesitate to contact us if you have uh, something that you want to discuss with us, uh, how to implement the carbon whether in your country or in your companies. Do not hesitate to contact us. It is an honor for me to help you to understand about the implementation of the carbon project in your side. Thank you. So thank you, Miss Jenny Nunes. So it is an honor. So hopefully that we can meet again in the next event for the talk series. Don't forget to meet again with us another talk series next week with Miss Tenglo, sustainability as a driver of business advantages, and in June 22nd with Miss Ho Heng Heng, Malaysia's National Sustainability Reporting Framework. Thank you. See you next time.